Good day, trader. My name is Wasku Smart FX. Welcome to my YouTube channel. So today's topic is the gold intraday strategy. So before we start with the gold intraday strategy, there are things we need to look out for. So which is the day trading techniques. There are little techniques whereby we need to look out for. Don't forget my gold intraday strategy. I'm doing the sections or the episodes on my YouTube channel, so you can look at the previous one I've done. So this one also um is still the same, or it's still the same patterns with what I've done before. So I'm just adding little things to it, and like things I've learned so far, things the market has shown. It seems like the market is revolving, or like it's not static. Like the way they move today, there is a little changes, or there are things that are added to it, maybe institutionally. So those are the things I'm going to have today and talk about things I observed. So now, when you are talking about the day trading techniques, there are two major things, which is the day, which is the time and price. Those are the two combination things that formed a day strategy, the time and the price. So anybody that is working with the strategies of time and price strategy, it needs to be a day trader. So under the time, the component under the time is Q zone. So the component under the time is Q zone. So and you know me, the Q zone I trade is the New York Q zones and the London Q zone. The London Q zone starts from the 2 o'clock New York time to 5 o'clock New York time. That's 2 a.m. And the New York Q zone start from 8 a.m. New York time to 11 a.m. New York time. So those are the Q time zones that you need to look for what market is doing. Those little times, just need to come online then and look what market is doing there, what is going to give you. So the second thing now is the price. So now for the price now, the price consists of two components, which is called the pattern and the institutional reference level. So I called it pattern plus IRL, the institutional reference level. And if you have been my followers or you have been my fans for so long, you will have understand that what I mean by institutional reference level. I've always explained it, and I've always traded with it also. So we should have known what it means and the pattern. And when you're talking about the pattern, the major patterns, even ICT talks about it in his 2023 mentorship. So, but it's also a favorable pattern also onto me too. So, okay, now let's look at the time. Yeah, let's look at the pattern. Sorry. So let's look at the pattern now. So the pattern we are going to look at now. So let me just draw it down. The very favorable patterns. So, okay. So now, um, let's say we have this. Let's say we have okay. Let's say we have this I. Then we have this I before. So when we have this I now, market comes above it. Then we have the break of market structure here. Then back. So this is how the patterns works. This this I here is a valid I, and the time frame we are going to be using is 5 minutes or 3 minutes. So this is how this works now. These patterns here now, this I here, I'm going to see this market taking out liquidity doing what? Doing the London or New York Q zone. Let's say this is where the London Q zone started from, and these are the range of the London Q zone. Inside this London Q zone, when market opens, Then I spotted this high. And when I spotted this high here, I want the market to come above this high. So I want market to comes above this high. So when market does that, this give me an acceptable choice that okay, market has come above a high, but now it is just not an ordinary high. The high must be an Asian section high. So which means that it must be an Asian section high. So when market take out the Asian section high, the next thing I want to see before I can enter any trade is I'm looking for a break of structure. And where is the break of structure can comes in? Market can break a structure from here. So this here, if this one happens, then it is called a major break. So this is a major break here. So I'm looking for a break of market structure. So when market took out the liquidity, the break structure here, this year to year is what we called the POI zones. So which means that from here now, I'm looking for where I want to be take my entry. There are two choice. There are two choice whereby we can take. There are two choices whereby we can take from here. The first one is we can make use of the ultimate trade entry, which is the OTE. So you draw our fib from the up down to the down. Then we took our entry from 0.65, 0.62. Yeah. So this level here, this will be our first POI. Then the second POI is what if we have order block? If you have order block, the order block that we have, okay, let's say we have another block here, but in the scenarios that I've been seeing so far in market structure, order block is always the last PY. So which means that if at all market want to do its worst, that is when it gets to the order block. But in most cases, it is either the ultimate trade entry or the fair value gap. So what if we have a fair value gap in this range? The number one condition of a fair value gap is that a fair value gap must come inside the premium range. You know, this is a premium range, right? Let me draw this. So you know premium range starts from here. So this box here is called the premium range, which means that above 50%. So the fair value gap must be inside this box. Let's say we have a fair value gap here. Let's say we have a fair value gap here. So if you have a fair value gap here now, I have 80% possibility that okay, market is going to return from either of these guys. So if I want to put my stop loss, how I'm going to put my stop loss? Let's say I'm taking my entry from here, then my stop loss will be above the high. So I don't want to see market, then I can just look for a very, very risk reward ratio 1 to 5, 1 to 2, 1 to 3. But this is the best scenarios, the ultimate trade entry, the fair value gap, and the order block. The order block is always the least of what market can get to. When they get into the order block or the ultimate trade entry, there will surely be a reversal. So let's get into the market and let's see. Let's see what the market have for us. So let's see a day. Okay, now this is good. 5 minute time frame. You can see it here that it is on the 18th. Yeah, this is 18th trade on the 18th September 2023. So that's last week Monday. So the market opens here. You can see when the market opens. These are Asian section. So when you wake up in the morning, first thing you have to do after we demarcate the London section, this is an London section. You can see 2 a.m. to 5 a.m. So when you wake up in the morning, first thing you have to do, you have to demarcate the highs on the liquidity high. So we have this first. Market took out the liquidity above this, right? And the second thing is this high. I'm very, very scared of this high when I wake up. But I found out that one thing market has been doing is that it seems like market always opens very, very early, like more than before. So when I see this high here, so when I wake up and the London section opens, you can see something happens here. we have a pattern here. We say like it goes like this. It goes like this. So this is where I saw it here. This I and this I. So which means that what we call this, we call it a failure swing, an XMX. So when market breaks, so let's say we have this. So what we call this is called a mitigation block. So when market breaks a mitigation blocks, the next thing you want to see is that market should come back into it, then sell. So that's what you want to see on a mitigation block. So when I woke up in the morning and I saw this market trading this way, then I found out that okay, market took out this low. This does not give me a very good reason to be a seller. Then I waited for this low also to be broken. So when this low is broken, then I said to myself, now this is the time to be a seller. Then I put my entry. I put my entry at this mitigation block here where market was consolidating. This consolidating part. Then I put my entry at the consolidating part. So I want to be a seller if market comes back into this sections. So I put so this I look for a very good. So I think I put it here. So I think I have this has this. So it was actually a nice trade based on what market is doing at that particular time. Okay, now this is how and why I entered the trade. I entered the trade failure swing, a mitigation block. You know, it is different from the pattern I showed you, but the pattern I showed you first is actually an authentic one you should be looking for. This one is just if you get along with the market and you see things happening very well. So now let me show you on my Telegram group how I took it and how it works. This is the trade here. You can see it here. This is my Telegram group here, Wasco Smart FX. So this is the gold sell limit. See the limit, see the trade itself. You can see how I entered the trade. It was very, very real. And this is how I entered the trade. So this is the trade here. I think this how it was selling. When it was selling, and I think I have when it take profit 50 px. So you can see it here, go take profit. So this is here, guys. This is here. You can trade it on any other pairs. Euro USD. I also trade it on Euro USD. You can see Euro USD that I traded. I traded this Euro USD trade. You can see on this Euro USD trade, I use a fair value gap. You can see a fair value gap as it hits the take profit. So that's for Euro USD. So that's it, guys. Like, share, and subscribe to my channel. More videos coming.